Hello, everybody. Welcome to Mortgages with me. I'm here again with Jeff Mudrick, and he is going to just give us a little bit of insight on the most recent rate increase and maybe address some questions that are looming from, well, it's been like 9 months since we've gone up 3%. So we'll just maybe have a quick discussion about that and hopefully be able to answer any questions that people have.
Awesome. Yeah. Well, thanks for having me again. Every time we chat, it's just after another big rate hike.
I
So,
know. I'm like, oh no, maybe we're jinxing this.
yeah, exactly. So last Wednesday, we saw another pretty significant increase of 0.75%. Essentially, if anyone wants to do some very quick math, for every $100,000 that somebody borrows or has borrowed, it's going to cost them now an extra around 36 to 40 bucks a month. So, for example, if you have a $500,000 mortgage, it will cost an extra $200 a month now if you're on an adjustable rate mortgage, which is a type of variable rate. But yeah, we're seeing a lot of changes. We're seeing a lot of decrease in affordability. I'll let Michelle talk a little bit more about like housing supply and how that's been going.
Yeah, like the supply is obviously it's good right now. We have seen obviously a decrease in values of homes, depending on what location. I mean, I work a handful of locations, so I can't speak for one specific off the cuff, but we're down about 25% in value. So we are seeing obviously the decrease in value, but it's kind of good for buyers to be able to afford. And then obviously with the change in interest rates, this is helping them, right? It's been a really, really hard couple of years for buyers. And I've had lots of clients that are like, I don't think I'm ever going to be able to buy a house.
Yeah.
And it's really, really sad to see because these are working professionals who have good jobs, who want to, grow their families and not have to pay rent and that kind of thing. So I really enjoy knowing that affordability is sort of coming down in that sense, so that buyers can get their foot in the door and having an opportunity to, get out of that rental trap, because it really is very much so a trap for them. Because when you're spending thousands of dollars a month on rent, how on earth are you supposed to, save for a down payment?
Like it's pretty wild that in 9 months we went from housing prices are skyrocketing, people are moving from the city to everywhere, and we've kind of changed it to, hey, buyers, like, yes, the monthly payment's going to be a bit more, but housing prices have dropped, like you said, 25%. So really, what most buyers are spending now compared to January is essentially the exact same on a property. The only difference is that they need less for a down payment, less for land transfer tax, and just your overall closing costs are going to be a bit less, which is a big win for pretty much every buyer out there.
For sure.
Yeah, what a difference 9 months can make.
Right. Yeah. We were definitely in a non-sustainable market back in January, February. I'm glad, we wrote it out. But the thing is like a shifting mindset. You're going to have that shifting mindset. And in fact, we're not shifting. We've already shifted and are continuing to shift. So I feel as though, and I know I'm repeating myself from our last conversation, but sellers and buyers all in the same have to realize that this is a new market that we're working with, and essentially 9 months ago is irrelevant at this point. It's history, it's gone. So the fact that your house could have been worth, $800,000 in January, February, or March, I mean, there's no point in dwelling on it because that time has come and gone. So I'm having to have some real, hard conversations with sellers right now that, they're really disappointed to hear that their home is worth less. But in the same account, some sellers are in this market where they're going to be selling and then they're going to be buying. So, provided that they're in that same sort of transition in this period right now, it's sort of evens itself out.
Yeah. The other thing too is that what I've noticed a lot over the past month, I'd say, is, it's hard to overpay on a house right now. It's hard to get like close to, for your example, that 800,000. And one of the reasons for that is because appraisals are coming in a lot lower. So even if
Mm-hmm.
someone does buy your house for the 800,000 that it was worth many months ago, that buyer, I won't dive too far into it, but essentially that buyer is going to need to be either A, have a boatload of cash in their pocket,
Yeah.
buy the house fully outright in cash, or B, have like, if a house appraises at 600,000, then the lender is only going to lend on like 80% of that 600,000. So the buyers are going to have to come up with an extra $200,000 plus their down payment. And that's been happening quite a bit recently. So,
Mm-hmm.
and I think it's, it goes back to what you said, where a lot of sellers have a mindset of, hey, my house is worth this. And the appraisers come and say, it's not.
No.
A few months ago it was, not anymore.
Yes. Yes, definitely. And that's the thing, is we have to live in the now. We can't just live in the past. You know what I mean? Like, it's just something that we're going to have a bit of a mind shift on. And I think it's our responsibility as the professionals in the industry to just educate our clients on, I know your neighbor sold for 800,000 2 months ago. I get it. Unfortunately, we can't look back at that as a real-time evaluation at this point. We have to move forward with real-time values and today's value, and the house is worth whatever a buyer is willing to pay
Yeah.
for it. So,
Maybe they'll pay 800, but yeah,
right.
you need Michelle's marketing to get that done. But anyways,
And the thing is too, with the banks, with the appraisals. So I did actually have a house that closed, almost didn't close, but a house that closed. We went firm in April, and then we were due to close July. It was a probate situation, so that's why it was a bit of a longer closing. And so at the time, the home was listed for 549, and we ended up getting 600. And it was a firm offer, firm deal, whatever. And so come, end of June, the buyer decided that they're going to maybe put a small mortgage, or I don't know the details of their mortgage situation. But so anyways, they were putting a mortgage on the house. And so end of July, they were like, oh, so we're going to have the bank come and do an appraisal. And it's like, okay, maybe they should have done an appraisal like when they went firm on the house,
few months
because
ago.
there's going to be a significant difference between values. And sure enough, they came in at um 520. I think it
Yeah,
was 520. So it really did put the buyer in a bind, and they did have to come up with the cash. And that's something that I just don't think a lot of buyers realize can happen. But again, it comes back to us being able to, inform them and educate them on this, the process and the risks and all that stuff. But a
100%.
lot of that is happening, and the banks are just getting super, super tight on value and making sure that people aren't being silly like they were a few months ago.
Yeah, like I'll give you another quick example too. So over the past couple of years, lenders were, depending on what lender you go to, depending on the type of mortgage broker you are, and if you, anyways, um, you might be able to get away with like extending ratios a little bit, getting buyers an extra 20, 40, $60,000 of purchasing power. But we've seen over the past few months, lenders kind of scale back and not grant as many of those exceptions, unless it's a super, super strong file. So,
Right.
the qualifying amounts are decreasing, the extended ratios are decreasing, and every lender is getting a little bit tighter with their money, as most people in general are.
Right.
Inflation's hurting a lot of people, and these interest rate hikes that are trying to control inflation are also hurting a lot of people. So we're seeing just like everyone's finances just tighten up just a little bit.
Yeah. But I do feel as though, like, we're like, real estate, I feel like, is inflation proof, right? Kind of like, you look at buying a home, it may not skyrocket in value in the next 5 years, but surely it's going to hold its value. It's not going to, depreciate hopefully,
Yeah, yeah.
substantially. And it's just, you put your money in the bank and it's worth less and less and less every month. And
Well, every
it's
month,
like,
especially now. The one thing
ugh,
I like to tell clients is, and I was told this when I bought my house too, and I'm working the industry. Jeff, when you buy your house, don't worry in 3 weeks from now what your neighbor sells their house for. It doesn't matter.
mhm,
Unless you want to sell in 4 weeks, it doesn't matter. You got
yeah,
to look at that 5, 6, 7, 8, 10 year plan. And
yeah,
that's essentially what matters. Like, the way I like to do things is not my opinion. I like to just look at history. So
mhm,
historical trends say housing prices increase on an annual basis or every few years, however much
mhm.
percent. I use a very conservative number at 5% appreciation. I know sometimes realtors yell at me for using such a small number, but in situations like this where we are seeing a bit of a downward trend, I think that number is fairly accurate. But anyways,
Yep.
so if you are buying a house today and you're wanting to you sign a 5 year term on your mortgage, you're not worrying about selling for at least 5 years. Sit back, relax, enjoy a smaller down payment, and those housing prices will,
We'll
it's
climb.
history, they will climb. Yeah.
Yeah. Do you have any tips or tricks up your sleeve for anybody that um, is maybe a first-time home buyer that wants to take advantage of this market right now? Obviously, I know credit score is a huge factor in the pre-approval process. Um, and obviously, don't go out and buy something stupid and go buy a car with big, huge
Oh, the amount of text messages I get saying, "Hey Jeff, just because we're moving up north, I think we're going to need another car. Can we do this?" I'm like, "Hey, you can do this after closing, but don't even look at a car beforehand." Yeah.
Yes, yes.
Good
Um,
tips.
Is there any just on the topic of credit, because I'm sure there's probably going to be lots of first-time home buyers maybe listening in. Um, is there any advice or a strategy that you can quickly just talk about for if their credits, like, I guess maybe explain where does their credit need to be in a qualifying position, and what are maybe 2 or 3 things that they could do to
Perfect.
increase their credit?
Great question. All right. Credit is so important. A lot of people kind of take it for granted. So to give a general idea, if you're going to look up your credit score online, you get one of those free lookups. Anything over 680, you're in a good spot
Okay.
to get financing for a mortgage.
Okay.
Anything under 680 is we kind of, there still might be an opportunity, but it's kind of in that needs improvement work. So some very easy ways to really boost your credit score. I'll give you as many as I can think of. First, the easiest way is to either spend less on your credit cards. So a tangible number is if you can spend 30% of your credit limit on a monthly basis, maximum of 30%, that will increase your credit score. So if your credit limit's $10,000 on your credit card or two credit cards, and you spend under $3,000 or under, that'll boost your credit score within that month. If you're kind of spending five, six, $7,000 a month on a $10,000 limit, second piece of advice, that's fine as long as you're paying it off monthly, but just increase your credit limit. Most lenders, most credit card companies would happily increase that credit limit for you. I'm sure you have 1,000 emails sitting in your inbox saying, "Hey, free credit limit increase."
Yeah.
So that's definitely an opportunity for you as well. Secondly, there's kind of a bit of a myth out there that checking credit really hurts your credit score. Checking credit maybe accounts for 10% of your score. So a perfect score is 900. If you check your credit every day, maybe you dive down to like an 800, something like that. So it's not the end of the world. You kind of have a couple free pulls a year that doesn't really hurt your credit. So what I would recommend doing is if you're on the lower end, if you're below 700, what I would say is talk to a credit specialist. And that's not somebody who only deals with people with credits. Talk to a mortgage broker or mortgage professional that you trust and have them coach you through different ways that you can actually increase your credit score. Because everyone's going to show a few different things on their credit report. So until we see that, it's tough to give like firm advice. But
Oh, for sure.
definitely increase your credit limit or spend less on a monthly basis. If you have one credit card, I would definitely recommend getting a second or getting a line of credit. And yeah,
Is
I
there
think
one piece of credit that's better than the other?
no, not really. Like
Okay.
revolving credit is like a credit card. Credit cards are
Cell phone
great.
bills too, right? Okay.
Cell phone bill will help. If you have any missed payments on your credit report, again, this is why storytelling is so important. If you have any missed credit, if you have any missed bills or missed payments, that will have a huge impact on your credit report. That accounts for about 30 to 35% of your credit score. So even one missed payment or one late bill will have a bit of an impact. But again, if you have one late bill in September of 2022, if you pay all your bills off fine and dandy until December, your credit's going to fly back up again. So, yeah.
Okay. That's good. That's good advice. One aside to that is, so if somebody, wanted maybe a credit analysis or something like that, they could come to you and be like, here's my credit. Tell me what I
Yeah,
need to
let's have a
do.
look. Exactly.
Yeah.
Yeah. Essentially, that's it. Yeah. Like what people pull their credit online, you see a little bit different from what I see on mine when mortgage brokers or professionals pull it. We see like every single thing. So we can, if you're talking to the right person, they can give you a full idea on exactly what to do to improve it, roughly a rough idea of how much it will get improved by. Yeah, I would say it's definitely really important if you're hovering around the 700 mark, or maybe you had a bankruptcy or consumer proposal many years ago and you're just unsure how to increase that. um,
Right.
there's definitely like coaching opportunities there.
For sure. For sure. There was one thing that popped into my mind and now I can't think of what it was.
Credit's a tricky
Um,
one. Yeah, credit has like a huge impact, not only on like getting a mortgage, but also on your interest rate as well. The higher your credit score, the better your interest rate's going to be.
right. Okay, that's a good one other thing would be cheapers. I keep losing it and I am like, it's right on the tip of my
It's a
tongue.
Monday. I get it.
Oh,
Yeah.
okay. I found it. How often do you see incorrect information on credit scores?
Yeah.
And have you ever had like super massive issues with someone being like, well, I don't have a loan at TD Bank. Like that's not me or something.
A lot more frequent than people think. That's such a great point. Yeah. So the
Yeah.
other reason why it's great to have somebody check your credit that's not like yourself checking your own credit, as I mentioned, because we see a bit different things. I'll call you and say, Michelle, I see that you have 6 credit cards with TD. Is that right? And you say, no, that's not right. So there's a whole like oh my gosh, I can't remember the name of it. Like conflict resolution, not conflict
Whereas,
resolution,
yeah, I know what
whatever.
you're saying.
Yeah. Okay. Hopefully other people do too. Anyways, there's a whole department that deals with this. We can get it sorted out in a couple weeks. But yeah,
Okay.
I've seen stuff where, even like certain blue banks will say, don't remove past credit cards off of their credit report. So it looks like they
Okay.
have 30 missed payments
Oh
and
no.
they don't. The credit card was closed like 5 years ago. So it's just like these things that can impact it, and you might not necessarily see it on your own. Very easy to fix, very easy to resolve. It just it takes time and it takes someone a
Yeah.
second to see.
One last question about credit, just while I'm thinking of it, because I'm like going back in my like own history, going like, I wish I would have known. Does any type of school like OSAP, 'tis the season because everyone's going back to school, does OSAP and that affect your credit, or is that not until after you're done school?
Yeah, great question. Hey, you should be a mortgage broker. Anyways, so every lender will have different policies when it comes to things like OSAP or student line credit and stuff like that. So it's not going to have a negative impact on actual score. But if you're wanting to purchase a property and have OSAP, if whether you're in repayment, which means I think it's 6 to 8 months after you've graduated, or if you're a first year student and just got that nice check a couple weeks ago, or this week or last week,
Yeah.
yeah, every lender is going to view that a little bit differently. It counts as a liability, but it's not going to impact your score. It might impact a little bit in terms of your affordability.
Right. Okay. Well, that's good to know. I wish that I would have maybe utilized my OSAP money better when I was in school than I did.
I'll have a separate conversation around throwing a lot of that money down the in the drain.
Yeah.
Yeah.
Yeah. But well, I think that's probably good to address, some of the issues that we're having. I don't know if there's anything else that you'd like to add or
I'm so curious about. I'm curious, like in the markets where you're working. I'll ask you for the crystal ball. What are you seeing? What do you think? Because based on the last few months, whenever there's been an increase, housing prices have continued to come down. So I'm curious
Mhm.
to know what advice you're giving your first time home buyers or just the home buyers that you're working with.
Well, I mean, when I'm working with buyers, I become the shark because I'm always looking at, okay, if we're not in competition, this is a door opening for negotiations, obviously, right? And it's unfortunate in like the seller's perspective because like if a house has been on the market for more than, well, it used to be like more than 3 or 4 days, you're like, ooh, there's an
Yeah,
opportunity there. But
yeah,
now we are seeing houses on the market for 30 and 60 days. And it's a bit of a shock to some sellers because they're like, why is this happening? But I think that we're going to continue to see opportunities come up. I think buyers are now just being a little bit more cautious and a little bit smarter, and they're listening to their real estate agent. Um,
oh yeah,
with going in with home inspections and financing conditions and that kind of thing. It's giving buyers an opportunity to do their due diligence and it's not, pushing them into a position where they sort of take it or leave it.
yeah,
I think we'll see the prices continue to steady off. I don't personally believe we're going to see it plummet or skyrocket again anytime soon. I think we might kind of just ride it out in the middle somewhere.
yeah,
Um, but I think that one of the most important things that I'm telling, like I've got a listing in Madoc right now for 299, and as you can imagine, everybody and their dog can afford a $300,000 home. So, I'm getting bombarded with emails and calls and texts every day about, wanting to come and see the property, and I have no problem showing the property. But the first question I ask is, number one, are you working with a realtor? And number two, do you have a pre-approval in place? And they're like, oh, like we didn't think that we had to have a pre-approval in place. And I'm like, well, that is like the number one first step that you should be taking before you step foot in a
yeah.
house. Like you don't go and sit at a restaurant and start eating without bringing your wallet with you. Like that's just silly.
That is such
Um,
a good analogy. Oh my God. I think you've said that a couple times, eh? That is
yeah,
phenomenal. That's great.
yeah. So it's just, I think it's really educating them on the process, getting them informed and to help them make informed decisions. I think that's the most important step right now is just guiding them through the process. And whether you're a first time home buyer or whether you're somebody who's selling their home to move up or to downsize or whatever, I would just be the best piece of advice is we work in this industry every day. So as much as you probably think some people think that they know way more than we do and that they know the value of their house, and I get that, but if they would just listen to us, explain and be able to back it up with facts and data. I think that's what a lot of people are missing is the facts and the data. So
Yeah.
they're just making up their own sort of stories and their own figures and facts in their head. But I think people just need to be open to actually having a professional conversation about, this is where we're at. And I'm always an open book. So if my clients have questions or my sellers have questions, like there have been many of times where I've listed a property higher than what I believed it was going to sell for just to show them that, if we don't get any showings in the first week and we don't get any phone calls and now we're, 30 or 60 days in and we've had one showing,
Yeah.
this is a tall tale sign that our house, the price is off the mark, right? Like
Yeah.
so I
Not,
think
yeah,
it's
like you said,
just,
it's not January or February.
yeah, exactly. Like there's people aren't, it's not like the Black Friday, those Giphies or whatever they're called. You see the Black Friday things where they open the door and everyone's just
Yeah. Yeah.
running over each other. Like that's what it was like in February and March for
Yeah.
the real estate industry. But now we're looking at a more stable market, which is good, So I'm
Well,
not I'm not concerned in any way. I think it's a very good thing. And I mean, for me, it's the process of listing your home. Like I have this list ready concept that, it kind of just goes through a whole system of making sure that you're listing ready. Like you don't just throw your house on the market and
Yeah.
hope for the best because you think the market's going to continue to downturn. And you know what I mean? Like they want to just get their house up so they don't miss out. Well, if you take a week to actually prepare your home, you could actually save yourself a shit ton of money. You
Yeah.
know what I
Yeah.
mean? Like if
For
you
sure.
just do the few little things, and like that's why we come in and we evaluate your home and say, and there's room for improvement with every home, whether it's a luxury $1 million home or a $200,000 home. I treat everybody the same and I give them the same advice. And because we know what sells and how things sell, and that's our job, is to, give them insight on how to improve the value of their home. And whether or not they choose to do that, that's totally their call, but it's our job to ensure that they know what their options are. So
Yeah. And
I
just
take
along,
I take pride in that.
yeah. And just like along the same lines, when you say, you give advice, you give tips and tools and techniques to sell the house. Like the clients have to do their homework as well, and it's the same for me as well. I tell every client in our initial discovery call, I'm like, hey, I'm going to ask for about half an hour to an hour of your time. You got some homework to do. Let's get these documents so that you're at the restaurant with your wallet, ready to pay for that like gorgeous meal that you're about
Yeah,
to order. So yeah, like
exactly.
I know we talked about this quickly before we went live here, but just the fact that pre-approval, it might sound a bit annoying or might not be something people love to do. Although sometimes people absolutely love it because they know the number down to the penny that they can buy at.
Right.
But anyone who was pre-approved with the variable rate needs to get pre-approved again.
Yes.
Because rates increase, buying power is decreased somewhere around like 5% for most buyers. So if you could afford a $500,000 home last Monday, you can afford a 475,000 ish home today.
Yeah.
So it's important to get pre-approved again, so you're not most importantly, you're not wasting your time, not wasting your realtor's time or just the seller's time. So yeah.
Everybody's time is valuable. So I
Yeah,
mean, if you're going to do something, do it right. Right? And that's kind of how I sort of coach my clients, is if we're going to do this, we're going to do this right, because I want you
yeah,
to have a really great experience. And in order for us to have a really great experience, we need to do one step at a time.
for sure.
So
Yeah. Quick tips, a
um,
quick tip day, eh? It's just one of
yeah,
those.
yeah. Here I was thinking we weren't going to have too much to talk about, but here we are.
Yeah, yeah. Oh, there's always enough to chat about. Yeah. So I like
So
this. We'll see you
next
1 month.
month.
Yeah.
Yes.
Exciting.
All right. Well, thanks, Jeff. I appreciate your time, and thanks everyone for tuning in.
Thanks, Michelle.